Warren Buffett, the Oracle of Omaha, is known for his disciplined and value-oriented investment approach. In the early days of his career, Buffett was skeptical about investing in the airline industry, citing its high fixed costs, cyclical nature, and intense competition. He often referred to the sector as a death trap for investors. However, this skepticism would eventually change as Buffett saw an opportunity that he couldn't resist, and his decision to invest in US Airways would become one of the most memorable chapters in his storied investing career. Part 1. Buffett's decision to invest in US Airways in 1989 and the reasons behind it. In 1989, despite his previous reservations about the airline industry, Warren Buffett made a surprising move by investing $358 million in US Airways through his investment company, Berkshire Hathaway. This decision was driven by a combination of factors that made US Airways an attractive investment opportunity for Buffett, even though it contradicted his earlier views on the airline industry. One of the primary factors that drew Buffett to US Airways was the value he saw in the airline's preferred stock. At the time, US Airways was offering preferred shares with an attractive dividend yield of 9.25%, which was significantly higher than the yields available from other investments such as government bonds or blue-chip stocks. This high yield provided a steady stream of income for Berkshire Hathaway, and offered the potential for capital appreciation if the airline's financial performance improved over time. Another reason behind Buffett's decision to invest in US Airways was the airline's strong presence in the lucrative East Coast market of the United States. With a dense network of routes in this region, US Airways was well positioned to benefit from the growth in air travel demand, particularly for business travelers. Additionally, the airline had secured valuable takeoff and landing slots at key airports, which further strengthened its competitive position. Buffett was also impressed by US Airways' management team, led by CEO Ed Kolodny. Under Kolodny's leadership, the airline had demonstrated a strong track record of profitability and growth, which inspired confidence in the company's ability to navigate the challenges facing the airline industry. Buffett believed that a strong management team was crucial for the long-term success of any investment, and he saw this quality in US Airways. Lastly, Buffett believed that the deregulation of the airline industry, which had begun in the late 1970s, would lead to industry consolidation, as smaller carriers struggled to compete with larger, more efficient airlines. He expected that well-positioned carriers like US Airways would benefit from this trend, as they could acquire struggling competitors at attractive valuations and further strengthen their market positions. Despite the challenges that US Airways would face in the years following Buffett's investment, these factors combined to create a compelling investment thesis for the Oracle of Omaha. Buffett's decision to invest in US Airways, even though it contradicted his earlier views on the airline industry, demonstrates his willingness to adapt his investment approach when presented with unique opportunities that offer significant value and potential for long-term success. If you found value in this video, please like and subscribe for more. Also, please join me on Patreon for daily stock ideas. Now back to the video. Part 2. Challenges faced by US Airways and the airline industry in the 1990s. Even with Buffett's investment in US Airways, the airline faced numerous struggles and challenges in the years that followed. The early 1990s brought a recession, higher fuel costs, and increased competition from low-cost carriers, all of which put significant pressure on US Airways' profitability and financial performance. One of the primary challenges for US Airways during this period was the rise of low-cost carriers such as Southwest Airlines, which began expanding aggressively into the East Coast market. Southwest's low fares and efficient operations forced US Airways to lower its own fares to remain competitive, which put a strain on the airline's profit margins. This intense competition also led to overcapacity in the market, as airlines engaged in a race to offer more flights and capture a greater share of the growing demand for air travel. In addition to the competitive pressures, US Airways faced higher fuel costs during this period. The 1990 to 1991 Gulf War led to a spike in oil prices, which increased the airline's operating costs and further eroded its profit margins. These higher fuel costs persisted even after the conflict ended, as geopolitical tensions and supply disruptions continued to impact oil markets. The early 1990s recession also took a toll on US Airways, as demand for air travel weakened amid the broader economic downturn. With fewer people flying, the airline was forced to cut capacity and reduce its flight schedule, further impacting its financial performance. In response to these challenges, US Airways embarked on a series of cost-cutting measures and strategic initiatives aimed at improving its competitive position and financial health. The airline streamlined its operations, implemented new revenue management systems, and pursued alliances with other carriers to expand its network and offer more travel options for its customers. Despite these efforts, US Airways continued to struggle in the face of industry headwinds. In 1994, the airline reported a net loss of $685 million, which marked its first annual loss in over a decade. This poor financial performance led to a decline in the value of Berkshire Hathaway's investment in US Airways, and Buffett publicly acknowledged that the investment had been a mistake. However, even as US Airways grappled with these challenges, Buffett remained committed to the airline and continued to hold onto his investment, in the hope that the company would eventually turn around and deliver value for Berkshire Hathaway and its shareholders. This period of struggle illustrates the unpredictable nature of the airline industry, and the importance of patience and perseverance for long-term investors like Buffett. Part 3. How Buffett and US Airways navigated these challenges. Despite the challenges and struggles faced by US Airways, the airline eventually managed to turn its fortunes around, thanks in part to the efforts of its management team and employees, as well as the broader recovery in the airline industry. As US Airways implemented cost-cutting measures, forged strategic alliances, and adapted to the changing competitive landscape, the company began to show signs of improvement in its financial performance. One key factor in US Airways' turnaround was the airline's focus on optimizing its route network and operations. By cutting unprofitable routes, increasing the utilization of its aircraft, and expanding its presence in key markets such as the East Coast, US Airways was able to enhance its revenue generation and improve its profit margins. Additionally, the airline's partnerships with other carriers, such as its code-sharing agreement with United Airlines, helped to strengthen its competitive position and increase the range of travel options available to its customers. These alliances allowed US Airways to tap into new sources of revenue and enhance its network without incurring significant capital expenditures. As the airline industry recovered from the challenges of the early 1990s, demand for air travel began to rebound, which further supported US Airways' turnaround efforts. With more people flying and a more efficient operation, the airline's financial performance improved steadily over time. This turnaround in US Airways' fortunes had a positive impact on the value of Berkshire Hathaway's investment in the airline. By the late 1990s, the company's stock price had risen significantly, allowing Buffett to eventually sell his preferred shares at a profit. In 1998, US Airways paid back Berkshire Hathaway its $358 million loan with common stock, which were later sold for $574 million. Buffett's mistake had also brought him in around $240 million in dividends. This profit demonstrated Buffett's patience and long-term investment philosophy, as he held onto his US Airways stake even amid the airline's struggles and eventual recovery. Although Buffett has since referred to his investment in US Airways as a mistake, the eventual profit generated from this investment highlights the importance of perseverance and the ability to adapt in the face of adversity. Buffett's experience with US Airways serves as a valuable lesson for investors about the complexities of the airline industry and the potential rewards of a patient, long-term investment approach. Part 4. The eventual outcome of Buffett's investment in US Airways and the lessons learned. As mentioned earlier, even though Buffett made a profit on his investment, he admitted that the investment was a mistake, and that he had tempted fate by investing in a capital-intensive and highly competitive industry. Despite the financial success of the US Airways investment, Buffett learned valuable lessons about the importance of staying true to one's investment principles, and the risks associated with straying from them. Warren Buffett's journey with US Airways serves as a fascinating case study in the world of investing. Despite his initial skepticism and the numerous challenges faced by the airline, Buffett's investment ultimately proved profitable. However, the experience also provided valuable lessons for the legendary investor, reinforcing the importance of adhering to one's investment philosophy and understanding the unique risks associated with each industry. Thank you so much for watching.